Hey gang, yesterday I recorded 2 weekend review videos. Unfortunately, after looking at them, I didn't feel the quality was up to par and decided to scrap them. So I was going to go a second week without giving you something, but fortunately we had a very good discussion in this morning's live room session. I was able to record it and well, I'm going to share that with you today. Hey guys, Akil Stokes here, head currency trader with TradingPower.com, and welcome back to another weekend review video. For you guys that are new, thank you for subscribing, and for you guys that, well, have been with me for a while, I always appreciate the support every time you like, you share, you comment on a video. It allows me to know that I'm doing the right thing, that I'm reaching you guys, and, well, just keep it up. Last week, I was down in Alabama and Atlanta, and well, I was very excited to get back to the markets. Not only do I have a passion for trading, but I love working in the live room with the traders I see every day. We really have a community forming there, and it really works a lot like a virtual prop firm. We've got newer trainees in there that are looking over my shoulder, trying to learn how to trade. We've got trainees in there that know how to trade and are on that they're on that verge of going full-time or going live by themselves, but need that little extra support. And then we've got some seasoned vets in there that know what they're doing, and just are in there to get a few extra eyes on the market. Maybe I see an opportunity that they don't, maybe they see an opportunity that I don't, and to just share ideas. So it worked very, very well. And well, being by myself for a week, it was kind of lonely. So very happy to be back. Also, Jason and I had a very good week. I know I haven't updated you guys in a while, but I think last week we were about minus 3% return on investment. So we had a little bit of a drawdown. This week we made a comeback. I think we were about plus 4. We ended up putting in about, I think about a 4% return this week, putting us on, a slow and steady path towards our goals for the year. I think we're right at 27%, somewhere around there. That's without the money management. That's just simple, basic position sizing, none of the fancy stuff that we teach you in the training. And hey, a quarter into the trading year, being more than a quarter up, that's hey, I'll take that. We're on pace to do very, very good. But anyway, what I want to share with you guys today was a discussion we had in the live room. Now, we started off the day with a drawdown. Me and Jason took 2 separate trades on the same pair. Both got hammered right away. Fortunately, I did have a pair from earlier in the week that I was trailing a position on that ended up doing very, very well. And well, that brought up the topic of trailing stops and how it's a give and a take. Everything we do in this industry is a give and a take. There's no perfect way to execute. Well, I guess the perfect way to execute is to trade your plan. But I think too many traders come into with the expectations that they're able to get everything out of the move every time. And that's just not the case. Sometimes you're gonna take targets off and the market's gonna go up without you. And you're gonna, be like, oh man, I wish I could have got more. Other times you're gonna take targets off, or you're gonna trail targets and the market's gonna stop you out, and you're gonna wish that you would have had a set stop in or a set limit order in. And you can't beat yourself up over that. The only thing you can do is trade your plan. And if you do that consistently, you're going to be in the right spot in the big picture. So check out the discussion we had for in today's live room session. And I'll see you guys at the end to let you know about the free trading workshop that's coming up in April. You make some, you give some back. The key is to give yourself a good enough cushion so that when you give some back, it doesn't hurt. We just took about 50 something pips of losses today. Jason and I, he took 35 on pound yen. I took 28 on pound yen, so 50. It's more than 50 something. That's 63 pips of losses today. But we had 192 pips of gains going into the day, so we give ourselves a little bit of breathing room. I will fully take being able to have a bad day and finish with a positive week than blowing everything. I don't see us blowing everything. I don't know that unless we take a few more trades. Euro dollar's up about 90 right now, and keep rolling those stops up. Let me just adjust that as well. I'll show you guys in a little bit. I'll bring it over while you guys are looking. So I know, hey, worst case scenario, 45 pips if this thing comes all the way back. See what happens up here. But worst case scenario, 40 something pips. It's not going to be as good as 90 or 100 pips, but it's better than hey, that's what you face when you're trailing targets or trailing stops. You face that possibility. You face that possibility of the market coming back and stopping you out. And it's really a tough mindset between the two, because when you're shooting for a set target, here's the problem. And it's not a problem, but it's how most traders think. When you're shooting for a set target, say you're shooting up here, right? And the market does this, right? Then what do? You get upset. You complain that, oh man, I shouldn't have took targets up here at 100 pips. I should have left them on until they rode to 200 pips, right? Have any of you guys ever been there? You set a target, the market blows right past it, and then you beat yourself up for not getting the entire move? Give me a yes if you've been there. I've been there. Yes. Yeah. Well, then the next time you do this, right? Well, the market blew past, so Akil's been teaching me about, I finally got to the active trade management part session in the training. He's teaching me how to do this. Let's give it a try. And then the market does this, right? Instead of going up to that level, we do a little of that and a little of that. And you're like, okay, well, I'm not going to take targets off here, but I'm going to trail stops up here. And you're like, oh man, this is good. This is good. This is good. I'm going to catch that big move. I'm going to catch that big move. And now you're stopped out for like 20 pips. And now you're like, oh man, if I just would have had targets at my initial level, I would have had 100 pips. Has anyone been there? Yes. Everything in this game, guys, it's a trade-off. Everything, Danny says 2 days ago, everything is a trade-off. There's no perfect way to do it. If you're looking for the big pot of gold, if you're looking for everything, you're always going to be disappointed, because in order to get the big move, you've got to take these type of pullbacks. In order to avoid these type of pullbacks and maximize your profit, you got to have that set target level. But then you potentially miss the big move. I think what you need to do is just, you need to accept that. Well, you need to do this. You need to tell yourself that no matter what happens, the most important thing is what? As Sergio says, follow my rules. That's all you can do. I told you guys about the pound yen trade on Tuesday? I was 12 pips away from targets. I'll show you it. You guys should remember this one. 12 pips away from targets. My targets were down at 177 even. I got involved right at this level up here, right? 180 even. A little bit underneath it. 180, lower close, 179.86. My second targets were right here. 177, right above the even handle, right? That's a nice, safe place to be. Market came down. I did take profit up here. Took a little bit. I'm not dumb. Market came down 12 pips away from a 282 pip target. And then did this. Bang. Ouch, right? Ouch, that hurts. When I did my trading recap, right? When I did a rewind on my day and I evaluated my trade and I wrote in my journal, I took notes in my journal, what do you think I said about this trade? When I graded myself on this trade as it being a good trade or a bad trade, because those are the only two categories that matter. Win and loss doesn't matter. It's either good trade or bad trade. What do you think I wrote this trade down as? Good or bad? Good trade. Why? Because I followed my rules exactly the way I was supposed to. Now, you get many rookie traders out there, right? Many rookie traders that out there like, well, Gil, you should have just took it off right here at 77.13, right? That would have been what? Taking profits early, right? And that's a cardinal rule of something we don't want to do. And of course it looks good in hindsight, right? In hindsight, of course I should have, right? I'm not an idiot. But we don't trade the markets in hindsight, guys. We're not like a lot of those phonies you see on the internet that are in trading forums and they post a trade after it's completed. And they always make sure, right? You know what I'm talking about. They always make sure to get out at the lowest position before it reverses. We're real life traders. We trade this thing live. We trade with a blank right side of the chart. We don't know what's going to happen. This thing could have easily dove down some more. But I followed my rules, and that's why it was a good trade. Because what happens if I take it 13 pips early this time? Well, next time, I look to take it 13 pips early, and the market becomes 13 pips before that. Now I'm taking it 25 pips early. Now I'm taking it 50 pips early. Before I know it, I don't even have a target down there anymore. I'm just taking it wherever it feels good. I told you I had a trader friend of mine that left 500 pips on the table a single month because of that. He left 500 pips on the table because he started taking things 5 pips early, and then 10 pips early, and then 20 pips early. And before he knew it, he was taking trades off 50 pips early. Process over outcome. Did we follow the rules? And you can't beat yourself up over it. It stinks. You could feel like a gut punch. That's fine. But at the end of the day, you got to pat yourself on the back and say, hey, it was a good trade. I did exactly what I was supposed to do. And in the long run, that's going to give me continued success. Because people that break the rules, people that move their stops back, I'm going to move it all the way up here to avoid it. People that take profits off early, they don't win in the long run. They get out really fast at the beginning of the race, and then they die. We're in this for the long haul. And the only way to do that is by consistently following our rules. All right, so I hope you guys enjoyed that little snippet from the live room. If you have the free time, I trade and open it up every day, New York time, 8 o'clock to 11 o'clock. So if you're free, certainly sign up for a free trial. I'll go ahead and, well, we're redoing our website, but go to www.tradeempower.com. Click on the Trader Resources tab, and go find my live room and spend a week with us. If you like it, we'd love to have you. We'd love to get you into the virtual prop firm, which is what we're basically doing. Love to have a few more eyes on the market. And if you're new, I love teaching. It's a passion of mine. So I'd love to hopefully educate you on a few things during your short period in there. And if you like what you see, of course, you can obviously opt to stay in. But mark your calendars, guys. April 6th through the 10th, the Technical Trader Workshop. This is the biggest, as far as I'm concerned, the biggest online technical trading event out there. We're going to do a week's worth of training. It's going to be, last time when I did Vision Week, I focused more on the macro, more of the big picture, the psychology, the setting up your trading the right way. This time we're going to dig a lot more into the technicals, talking fibs, structure, and I'm going to show you how to trade the cipher pattern the right way. It really annoys me, and I know it's not your fault, but I see so many traders out there that trade the cipher pattern wrong, and typically I don't like to comment on what other traders are doing because you can trade bats different ways, crabs, sharks, 5-0 patterns, whatever you want. They have vague areas, butterflies too. However, with the cipher pattern, it's a pattern that we created in-house, meaning one of our guys created that pattern. So we know the specific rules. So I feel comfortable letting you know that, hey, it's either wrong or it's right. So if you want to learn how to trade that the right way, make sure you sign up for that. And again, we're gonna have some people in talking about trading psychology, and well, it's gonna be a fun time. You get to hang with me 3 hours plus maybe a day for 5 straight days. So mark off your calendars for that. And until next time, traders, plan your trade, trade your plan. Have a great weekend, and good luck in the markets next week.